Hello and welcome to this end of the year analysis on DXY dollar index. My name is Vic. Thanks for joining me here. We'll start our analysis from 12-month time frame because we are just about to finish this year, 2022. So this is what we had. If you have been following my analysis, you know that we have been bullish biased from here from this particular point where majority of the media was saying that it was going to go down, but we were looking for a bullish move, and the reason behind that was very simple, that we had this W pattern forming. It completed somewhere around here, and then since then market started to has started to take a little correction from there. So in past month or so, the market has fallen down. The dollar has been going down because of the formation of this W pattern. A lot of people will also treat this as hitting the previous structure level or whatever. But in our methodology, we only focus on quantifiable WNM patterns. So this is what we have here on 12-month time frame. The candle is very bullish. So I'm not expecting this to turn into bearish candle. By the end of this year, anything can happen in the market. Things can change, but the way it is looking right now, this is still very strong candle. A lot of momentum, a lot of bullishness is in there. Hence, I do not expect it to go and turn into a bearish candle by end of this year, in next 15 days or so. If I go and look at the 6 month time frame, this is a very important time frame that you are looking at because we have a 6 monthly rejection candle forming here. Now the way it is standing right now, it looks like a pin bar sort of thing, or people will say that this is like a pattern where you have um, a candle and then you have a pin bar, and then possibly it's going to be a reversal candle behind after that. Okay, going downwards. So that is still a possibility. However, we trade what we see. So right now this is standing as it is right this, and this is not giving any sign of that it is going to fall down any further. Why is that? Because when the market forms something like this, it starts to struggle around this point where it wants to find its bias, whether it wants to say I want to go down, turn into a small bearish candle, or I want to go up and turn into small bullish candle. So it's all about having a small bull body or small bear body. So there will be a lot of struggle around here, and anything can happen around the market during this time. If I go to the 3 month time frame, possibly it will probably give me excuse me for that, it will give me a better sense of where the market wants to go. So as you can see, the market has been bullish and it took a parabolic move. We have been talking about this for now months, and now for the last 3 months it has been falling down. So the way it is looking like this is, it depends on how this 3 month candle actually finishes. If it finishes slightly higher above this previous structure here, you see this candle's high, if it finishes above that, then it will be a very good chance that we will probably see another 3 months candle going down. Okay, if it closes below this, if it turns into bullish candle and still closes below this, not bullish candle, let me actually go back to the 12-month time frame, and then it will probably make more sense in terms of scenarios. Okay, so if I go to the 12-month time frame, sorry, 6 months time frame, um, here, okay, yeah, this is what I was talking about. So if this turns into a bullish candle, okay, this bullish body here like this, okay, and if this bullish body has closed above the previous high, right, the previous high of this candle, then there'll be a good chance that market will try to go and form a bearish candle here. However, it may also try to go higher, slightly higher, and then form that candle. That is also one of the scenarios. If it remains like this, then there is a good possibility that the next 6 months are going to be candle wick filling. So that means the DXY will become bullish once again if it remains like this. Okay, so we'll have to see how it actually closes this year, and then we'll have to analyze further to see what kind of body it has and where that body has closed. If it closes in here like a bearish candle, then it will have a better chance of actually forming, the best chance actually forming another bearish candle. Okay, and that's when the DXY will be bearish. For now, even though it looks like a pin bar, rejection bar at the top, it is not a very good sign for bearish move, because it can depend on the body of it, the body of the candle of the 6 months. Okay, so let's go and look at the monthly time frame. On the monthly time frame, the market has simply has taken like little correction here. So we had very good impulse, and then we have a correction, which means that market is still bullish. Okay, so this part is obviously bearish, so last 3 months is bearish, but overall this is still bullish. As you can see, the market went up, right, went up high, and then it has gone up. So it's quite possible that market will come to one of the important levels, maybe this here, maybe structure here, or maybe one of the FCP zones, and then it will probably start to go back up. And that is why I was saying that the market can actually push back up. Now, in this last few weeks of last few days of December 2022, what can happen? So for that, let's go and look at this chart here. Okay. So for this chart, actually, to be able to understand that, let's go and look at what we have been talking about, like since we started to analyze from here. So as I said, we were here looking for a bullish move because the market was in a multi-year consolidation, and this was the M pattern, the W pattern forming. The market went to the first FCP zone. Okay, there was a little bit of a reaction here, but it went to the next target here, which is the target 2, and that has been completed. The market fell down, and when it fell down, it went to where? It went to the lower FCP zone here, lower structure zone here, lower previous structure here, right? And it is getting rejected from there. So it's quite possible that market will try to go back up into the previous FCP zone, and maybe inside slightly higher in this FCP zone before the end of this year. And if it continues to find enough bullish momentum, then it can revisit the previous FCP zone. And the way it will, if it continues to rise higher than 116, 119, then 127 can be reached. And there is one scenario where it can go to all the way to 147 as well, because you will see that we will have in that case a bigger W pattern, something like this, right? So people don't believe in these patterns, right? They just remember that this actually worked out well here, this worked out well here, right? So these patterns are going to take time. So do not focus only on current candles or last 1 or 2 candles. Just focus on the entire big move, and that's what is telling us. If it continues to go above this target 2, then target 3 is going to be around 127, and if it continues to rise up, then it will be probably around 147 or so. That can also be reached. So dollar is still bullish, and it can still rise higher, much higher. So just beware of that. Okay, so if right now where it is standing at this structure level here, and the fall that we had was just a little correction. The market is still bullish. Okay, now in terms of bearishness, the market can still fall down to one of these levels. The lowest level it can fall down to is approximately 90, because this market does not leave any kinds of gaps open, and there are several gaps which have been left open here in this move. Okay, in this entire move, and it has been filling few gaps. One has been filled here, another one has been that one is actually still open. This one has been filled, this is still open, there are few here, and one of the lowest gaps is around 90, so it can still fall down to 90. That's the bearish side. But we know that these gaps, they may take time, they can take years. There was one gap on CHF JPY, I believe that was actually filled after 42 years. So you do not know when these gaps are going to get filled, but they are going to get filled. So it's possible that DXY will go all the way to 147, 127, and then come back to fill these gaps up. So there can still be possibilities. So do not rely on these gaps as one of the targets. Trade what you see. So we have impulse and we have a correction. So this is just a little minor correction against the huge bullish move. Hence, the dollar is still bullish here. If I go to the daily time frame, we have this extended M pattern forming. So for that, let's look at this chart here. Okay. Now, the possibility that I was talking about in the previous analysis was very simple, and this was like this. So the market was forming kind of like a head and shoulders pattern. So there was a wedge sort of thing, and the market broke out of correctly, and we were able to capitalize on that short move. So the gold went up, and most of the dollar pairs, inverted dollar pairs such as Euro USD, GBP USD also went up. AUD USD went up, right? Because the dollar was declining in this particular phase. However, dollar may rise back up. As I said before, these levels are still intact there. The market may still try to go back up and form a kind of head and shoulders pattern. However, this pattern is not like a very strong pattern. In our methodology, we do not like try to trade the head and shoulders in its purest form. We look at WNM patterns. So if I focus only on WNM patterns, and if I remove some of these previous markings here, then what you will notice that the market has created a kind of extended M pattern. So we have an extended M pattern, which means that market can still actually possibly go up. Um, we have a lot of cluster of moving averages here, and one of them is 200 moving average. Now I know that market has fallen below that 200 moving average, but that usually is not like no sign that market will be bearish, because it needs to go back and up and retest and then give me a momentum candle to be able to tell me that it is bearish. So for now, I will not look at like this cluster. I will say okay, this is still bullish and the market may try to go back up. So if I go to the 4 hour time frame, the market is already trying to move towards the 200 moving averages. So these levels which you have on the chart, 105.794, 106.789, 108.497, 109.233, and 9.520, and some of these minor levels here on the chart. I will post a link to this chart in the description of this video and the group. You can find it out. Okay, so these levels can still act as like very good target levels for bullish targets. Now if I go to the monthly time frame, what you will notice, if I remove, what you will notice that in the market is right there in this moving average. This is right there. Okay, which means that if even if this month ends as a bearish candle, there is a good chance that at some point in time we will see a bullish monthly candle, and that can be January as well, or it can be beyond that as well. So the market may try to go up all the way, like to one of the previous structure levels, or even like previous high. As I said, this is still bullish. Okay, if I go to the weekly time frame, on weekly time frame, what I can see that market has nearly come to the lower end of the Bollinger Band. So it is quite possible that it will go and visit the mid of the Bollinger Band, which is approximately 109 or so. So you see the dollar is still bullish, and trade what you see. So just take care, like if you're trading gold or inverted dollar pairs, in fact any market right now, like Dow Jones or indices or any sort of market, please pay attention to dollar, especially in the last few days of this year. And I leave you with this, and this has been our analysis on dollar index. Hope you enjoyed this. If you did, make sure hit the like button, subscribe to the channel, put in a comment below this if you have any questions or anything like that, and share it with other traders and trading communities. I'll see you in the next one. Have a great trading week and Happy New Year.